Hey, what's up guys? Sam here, and I will be doing the free video for Friday, March 31st, 2023. So the last week of March is in the books, and a pretty wild close today. Quite the spanking delivered to the bears from the market. But it's not just that. If it was just a one-day spanking, or even if it was just a weekly spanking and it didn't actually change the charts, it wouldn't be that interesting. But for the first time in a while, we are seeing some significant changes to the charts that you need to be aware of. So what I'm going to do in this video with you guys is just focus on two things. I'm going to focus on the SPX, and I'm going to show you the NDX. There's other things that we looked at in the premium video with the gold room. We looked at HYG, and I invite you to take a look at that on your own. The key level on HYG is 75. And above 75, the bullish moves in the broader indices do become a lot more believable. So above 75 HYG, that's where it becomes believable. We'd looked at the dollar, and the dollar has sell signals and is kind of in a bearish trend. So that makes the rally believable. But let's cover the signals here on the SPX and the NDX, and just see how things have shifted going into next month. So a couple things here on this SPX. One is the positive crossover here of see the green line and the blue line there? How they've crossed, the green has crossed through the blue. So that's pretty significant because that's the 2150 crossover, and that doesn't really tend to happen too much on accident, right? The last time that happened was up here, and then that created kind of a big flush to the downside, 900 points or so. So now all these attempts to pop, this one and this one and this one even, it never resulted in a crossover until now, right? So that's pretty important, step number one. Step number two is that the weekly squeeze histogram here actually does have now an uptick to it. You can see how it's gone from dark blue to kind of a light blue to the upside. So you have this weekly squeeze, which is really, really important for generating the next move, and that looks correct and works well with that bullish crossover. This is just neutral for now because the red line is falling, but they're both above the middle, right? So they're both lines are above 50, but they're incorrectly positioned. That just means it's neutral, so we don't give that any points, but we don't take away any points. But what that does tell us is that we need to look down here, because when the trend oscillator is neutral, then you need thrust, and you actually do have a thrust signal here. So all of that's pretty important there on the weekly chart. If you look at the daily chart, you have mid-level thrust. You've had this for some time now, almost a week. This is giving you a positive crossover here. So this combination of signals works quite well. And you're now trading above this previous swing high, and you're trading above the 50, right? So what does that mean? Well, it basically opens up the door back to these upper targets here. If you guys recall, we had given you a target months ago of 4180, and I thought that was going to be kind of the top. And it was looking that way, right? We hit 4180, we fell, casually fell almost 400 points, and it looked like it was going to be the top. But now we do have to contend with it again. The thing is, this test of 4180, unlike the last test of 4180, actually looks better, right? Because unlike on the X, where we tested 4180 the first time, we did not have the correct positioning of the moving averages, and we didn't have a squeeze, frankly. Now, this time, going back up to that 4180 level, we actually do have a squeeze, and the daily time frame is actually a little bit better position than it was before. So 4180 and then 4240 would be kind of the intermediate targets on SPX. Then we look at NDX, and it's frankly a little bit stronger in the near term, and I would expect that it's probably going to stay stronger just based on the dynamic around bonds and the fact that rates seem to have chilled out. The Fed doesn't seem to have any specific reason to be too aggressive with rates given the dynamics that are going on more broadly. So that all bodes pretty well, usually for tech to play catch up. But beyond just the rate story, you're actually seeing it in the charts now. So where the NDX takes the lead is it actually has full bull structure here on your moving averages, which it hasn't had before, right? You can see the red line has always been on top, and even up until basically here, everything was not totally correctly positioned. As of now, you actually have an upward angle to your moving averages, so that bodes well. You have the same 2150 crossover that you had on the SPY, where it went negative back here, so that bodes well. You'll see that there's a break of 50 here on the high-low pro, so that hasn't happened since the beginning of COVID, which was, 2-3 years ago now, right? You can see it attempted to get above 50 and was rejected every time before. This time it actually has gotten above. And from a kind of structure and Fibonacci point of view, the most critical level on this chart was down here, right? This kind of, the magenta lines are the strongest lines on the chart. And so you had this huge support band down there, and it held. And then on top of that, you went and got above this magenta line, and that held, right? You can see how well it held here. And then there was one line left, and it was this upper red line, which is the 618 of this high-low drop. And that comes in right there, right? So that red line that I just drew in is the same red line that topped the market here. So where are we at now? Well, you've actually gotten above it, right? So you've cleared major resistance, and at this point, based on the chart, I'm out of lines, at least until this next high here, right? So if you look at it kind of like traveling through space, there's just empty space there from where price is to the next level, which would be this previous swing high here on the NDX. So this stuff doesn't tend to happen by accident when you get above these critical 618s, and then you start getting moving average crossovers. And then on top of that, you have a weekly squeeze on the SPX. All of that is a significant change. I did look at the peripheral markets, so I'll leave those for you to do on your own, which was HYG 75, leave an alert, HYG 75, and the dollar, and rates, interest rates and bonds, and they're all working together. So going into April has some of the best seasonality of the year, and you have everything else working in concert. So what this tells me is things are a little bit extended in the near term, certainly. Would benefit from a pullback at some point, but the pullback should be bought, and we would look to take it into these upper targets, which would be up here right around 13.7 on NDX before we have our next conversation. All right, guys, that's my time. Hopefully all of this was helpful. Leave us a like, leave us a comment. You know the drill. Before you go somewhere else on the YouTube, let us know what kind of dog you have. If you don't have a comment, just anything down there helps us with the algorithm. Let us know what kind of dog you have, what kind of cat you have, or what their names are. And the algorithm would certainly appreciate it, and so would I. So appreciate you guys. Always fun chatting with you, and I'll see you next Friday. Cheers. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.